Investing wisely is a goal that many aspire to achieve, and the wealthy elite are often seen as paragons of financial wisdom. While they have amassed substantial fortunes, their investment strategies are not always what they seem. Today in Wisdom we will delve into the investment secrets of the elite, highlighting 7 things that the wealthy typically avoid putting their money into. These insights can help you make more informed investment decisions and avoid common pitfalls. Let's explore why the elite steer clear of collectibles, cryptocurrencies, precious metals, bonds, stocks, the importance of understanding companies and certificates of deposit. 1. Collectibles, such as vintage cars, art, and rare memorabilia, while fascinating and enjoyable to own, often fall short of the investment strategies employed by the financial elite. One prominent reason behind this is their illiquidity, setting them apart from assets like stocks and bonds. Converting collectibles into cash swiftly without incurring significant losses is a challenging feat. The wealthy prefer investments that offer liquidity, enabling them to seize emerging opportunities or meet financial needs without obstacles. Additionally, the value of collectibles is marred by subjectivity and volatility. The perception of what constitutes a valuable piece of art today might not align with future perspectives, making it exceedingly challenging to predict returns on these investments accurately. The elite gravitate toward assets with more transparent and foreseeable growth trajectories that are rooted in solid financial principles. In essence, while collectibles have their allure, their lack of liquidity, subjective value, and unpredictability render them less appealing to investors seeking stable and dependable returns. 2. Cryptocurrencies. Cryptocurrencies, such as Bitcoin, have indeed captured the public's imagination in recent times. However, the wealthy elite generally approach them with caution and often choose to steer clear. A primary reason behind this cautious stance is the extreme volatility inherent in cryptocurrencies. The financial elite tend to be more risk-averse when it comes to their investments, and the wild price swings and unpredictability in the cryptocurrency market make it a less appealing choice for their portfolios. Furthermore, cryptocurrencies are relatively new players in the investment landscape and lack the long track record that traditional assets like stocks and bonds boast. Established institutions do not back them, and they are often considered speculative assets. In contrast, the elite prioritize assets with a proven history of generating stable returns over time, and they typically place their trust in investment vehicles that are supported by well-established financial institutions. While cryptocurrencies may have the potential for significant gains, their uncharted territory and the uncertainty surrounding their future make them a less comfortable choice for investors who value stability and reliability in their financial endeavors. 3. Precious metals. Precious metals, including gold and silver, have historically been revered as safe haven investments, trusted for centuries as a store of value. However, the wealthy elite tend to reserve only a small portion of their investment portfolios for precious metals, and some may choose not to allocate any funds to them at all. One prominent reason behind this strategic choice is that precious metals do not generate income in the form of dividends or interest payments. This characteristic limits their capacity to accumulate wealth over time, as the elite prioritize investments that offer not only stability, but also the potential for steady growth in passive income. Moreover, the returns on precious metals are often intertwined with inflation and economic uncertainties. In times of economic stability, the demand for precious metals may wane, causing their prices to stagnate or even decrease. The financial elite gravitate toward investments that provide a combination of both income and growth potential. Precious metals typically lack this dual advantage, making them less attractive to investors who seek to maximize their wealth while minimizing risk. While precious metals have a storied history as safe haven assets, their inability to generate income and their susceptibility to economic fluctuations often lead the wealthy elite to allocate only a small portion of their investment portfolios to them. The elite prefer assets that offer a balanced mix of stability and growth potential, allowing them to build and maintain their wealth over time. 4. Bonds. Bonds, often recognized as a safe and stable investment choice, are frequently suggested for portfolio diversification. However, the wealthy elite, with their greater risk tolerance, usually choose not to allocate a substantial part of their wealth to bonds. The central rationale behind this preference lies in the comparatively modest potential returns bonds offer in comparison to other investment opportunities. The elite are motivated by the pursuit of wealth maximization and are willing to accept higher levels of risk if it promises more substantial returns. While bonds do provide stability and a reliable income stream, they are not celebrated for their wealth accumulating capabilities. This factor makes them less enticing to the affluent class, who tend to opt for investment avenues that are more aligned with their ambitions for substantial financial growth. In summary, while bonds serve a vital role in diversifying investment portfolios and offering stability, the wealthy elite's desire for higher returns often leads them to allocate a smaller portion of their wealth to bonds. Their focus on wealth maximization and risk-taking propels them towards investment options that have the potential for more substantial returns, even if it means accepting greater levels of risk. Warren Buffett once said, "Risk comes from not knowing what you're doing." This quote encapsulates the core principle of informed investing. The wealthy elite's approach of deep research and understanding of their investments reflects the wisdom in this quote. It highlights that the greatest risk in investing arises from ignorance and a lack of knowledge about the assets you are putting your money into. By being well informed, investors can make more educated and less risky decisions. 5. Stocks. Stocks are like building blocks in the world of investing, and most people use them in their investment plans. However, wealthy folks have a more careful way of using stocks. They focus on picking good quality stocks that can grow over a long time. They don't jump into the latest trends or gamble on risky stocks. Instead, they prefer to invest in companies that are strong, have a solid plan, and have a history of getting better over time. They're also more patient investors. They don't get worried by short-term ups and downs in the stock market, and they stick with the companies they believe in. Their approach is based on research and really understanding the companies they invest in. Another thing they do is to spread their investments across different types of companies and industries. This way, they don't put all their eggs in one basket. It's like having a mix of different ingredients in a recipe to make sure the meal turns out great, even if one ingredient isn't perfect. This helps them protect their money and be ready for any ups and downs in the economy. It's all about playing the long game and being smart with their money. 6. Understand companies. A vital investment strategy among the wealthy elite is their in-depth knowledge of the companies they put their money into. They take the time to dig deep, doing extensive research and analysis before making any investment choices. The rich are renowned for putting their money into areas they understand well, and they often get hands-on with their investments. They frequently invest in industries or businesses they have expertise in, which allows them to make informed and well-thought-out decisions. This approach sharply contrasts with the common behavior of many regular investors who often chase the latest investment trends or follow hot investment tips. Instead, the elite are well-informed and tend to base their investment choices on data and careful analysis rather than relying on speculation or emotion. In essence, this investment secret emphasizes the importance of knowledge and information in making financial decisions. The wealthy elite understand that a well-researched, informed approach is more likely to lead to successful investments, rather than following the crowd or relying on hunches. It's about being proactive and informed rather than reactive and speculative. 7. Certificates of deposit. Certificates of deposit, CDs, are considered some of the safest places to park your money, and they are especially attractive for those looking to keep their investments risk-free. However, the wealthy elite often steer clear of CDs due to one critical reason: limited returns. CDs provide a fixed interest rate, which is usually much lower than what they could potentially earn with other investment options. For those who have already built substantial wealth, putting their money in low-yield CDs represents a missed opportunity to make their money work harder for them. The financial elite have a different approach. They seek investments that strike a balance between safety and potential returns. While they value safety, they are more willing to accept calculated risks to achieve their financial goals. They recognize that building wealth often necessitates a more aggressive approach than simply relying on safe but low-yield options like CDs. For them, the opportunity cost of locking their capital into low-yield investments is too high, as they could potentially be missing out on more lucrative returns elsewhere. In summary, while CDs are a dependable and secure choice for many investors, the wealthy elite tend to opt for strategies that offer both stability and the potential for substantial financial growth. They are ready to accept calculated risks and make their money work harder to achieve their wealth-building objectives, recognizing that sometimes playing it safe can be more costly in the long run. Understanding the investment secrets of the wealthy elite can provide valuable insights into crafting your investment strategy. While the 7 things mentioned, collectibles, cryptocurrencies, precious metals, bonds, stocks, the importance of understanding companies, and certificates of deposit, might not be entirely off limits, the elite approach them with caution and often allocate their capital differently. To achieve financial success, it's crucial to evaluate your risk tolerance, financial goals, and time horizon carefully. Diversifying your investment portfolio and seeking opportunities in assets that align with your objectives can lead to a more prosperous financial future. And there you have it. Please share any advice, good stories, or inquiries you may have regarding this video in the comments section below. Give us a big thumbs up and subscribe to our channel Wisdom Will if you enjoyed this one. Moreover, make sure to enable the notification bell to receive updates on our newest videos. So, if you want to become more financially literate and learn more about money, subscribe for weekly videos. I'm Wisdom Will. Thanks for watching this video and see you again next time. Have a great day.